Welcome to Bitcoin Escape Plan. Bitcoin has been dropping off a cliff and shows no signs of stopping anytime soon. There's a major news announcement that I'll go over briefly in this video, as well as just kind of the sustained view of the channel, which is that we are going to continue to go down lower for the time being before a short bounce into March. We'll go over that all in today's video. Before we get into the 4-hour analysis, let's go over to bitcoinescapeplan.com. Every Monday, I've been releasing just data about what the price is doing. That's any of these green ones here. And then these other ones are the paid newsletter previews, where I'm going to go into some other topic that's relevant, like the housing market, the yen carry trade, gold specifically, SPY specifically in relation to Bitcoin. A lot of fun stuff there on the website. Go over and subscribe. More to come soon. And don't forget, subscribe here on YouTube. Oh, look at that. Got a new subscriber. Oh, shit. We're going crazy here on YouTube. All right, let's go back to the analysis, the 4-hour chart. So what is the chart telling us at the moment? The chart is very sad. Sad since Wednesday peak, and that has been dropping down. I believe the news, I think that was on Thursday. That's what caused such a major sell-off. But essentially, if we want to think about it just in terms of the key level failures, this was a failure of 90K after psychologically what has been happening, and I'll go over this more later in the video, is we experienced a failure of 100K. That's what just happened, is we had a failure of 100K and have continued to fall lower because of that. Now, anyone who's a viewer of this channel knows what actually caused that was this. This is the anchored VWAP that I've been tracking for years now. It's very, very accurate. It tells you exactly what you need to know. Leave a comment down below if you want me to explain more about how this specific tool works. But essentially, we broke below it in November. And then this is the first time that we reclaimed it over here, not this past week, but the week before. And then that's what's been causing us to drop lower, as well as the psychological pressure of failing another run to 100K. So I actually had drawn this line out, this ray. I really wish I had taken a trade on that, because God, look at how beautifully it breaks that. It retests it, it goes higher, it comes down and breaks it. Really, really great for had I been paying attention to the charts. I was not. I just had it drawn. So what we're looking for here is some bottom, some floor. So let's see where that could be. Instead of only doing the 4-hour analysis now, I guess I'm going to talk about the more broad. What are we looking for? So this is the pivot. Pivot is 76.2K. That's where price needs to stay above. For anyone who was paying attention, we dropped to 75.5K on this candle, which is certainly lower than I think anyone was expecting. I thought 80 was going to hold for now, to be honest. I do think, and I said this in other videos, I do think we're going to continue to see a breakdown into the first couple weeks of February before we start to see either a consolidation period or starting to come up from that on the other side of it. I got to remember, I'm looking at the camera now and I'm also having to move on the chart. Let me know if you want to see my face in these or not. Anyways, so the February, that's what I'm kind of expecting, is we're going to initially continue to break down lower. It's quite possible that we are going to close. I mean, this is the monthly. Let's see where the weekly pivot is the same. So we just started this weekly one, or this may be, no, this will close today. So if we close above 76.2K today, I wouldn't say that it's bullish, but it's the bare minimum for finding some consolidation here or finding some support here, is if we can close above that Fib pivot. At the moment, we are sitting at 78K on the nose, so it's certainly possible. The pivot point that I had talked about in the newsletter that still remains important, I believe, is 77.7K. Although it looks like we're way below that now. Is that this guy? No, it's not even showing up on this. We must have moved past that. I do have that written, though. That might be one of these levels. Doesn't matter. So what we're looking for now, psychologically, is some type of barrier that's going to prevent us from going lower. So where can we find that theoretical psychological barrier? I believe it's right here. I've talked about this a million times on the charts. This is super, super important. Like and subscribe if you remember. So March over here, March of 2024. This is the first time we break to new highs in the halving year. It's never happened prior to that. We don't know if it's going to happen again. But this is the first time on the chart that it behaves that way, with a major peak in March. Normally, it would be towards the end of that year where it would initially break the highs and then continue higher. So I think that kind of like shifted. I don't want to say it broke the 4-year cycle, because I don't believe that it did. I think it just kind of like skewed it a little bit, like how high it can actually go, and how low it can actually go as well. So what we're looking for right now is a psychological hold above. This is 73.8. Is the actual peak then. So what the market is doing now, just like how we just failed 100K. That's what happened psychologically, is we made a run for 100K and it failed it. And that is what's causing this major breakdown. What we want to see now is a run to close to that point. So that, like I said, 73.8K. We want to see a run close to that point, but a hold above it. The same way where 98 from 100 is whatever, like a percent or two. This would be an equivalent, where being about, what is that, 3%? Not even. Yeah, like barely 3% from the bottom of that range to get to that other point. That's what we're looking for now. And I would expect price is going to kind of pinball between these 2 points. And again, like we've talked about many times before, this moving average, this is on the weekly time frame, this is going to continue to get pulled down, I believe. And now it's like pretty certain. I talked about this in the newsletter, but now it's pretty obvious from looking at the movement at the moment. This is going to get pulled down below the 96K pivot point before the price re-interacts with the 96K pivot point. Now, what does that mean? What that means is we're going to see sustained pressure to the downside, even when we do finally recover the weekly SMA, which, as you can see here, this in January, the price is going to regard that as a failure of the weekly SMA. It's a finally we got a reattempt after we've been broken below since October. We've been touching it since August of last year. We've been showing weakness literally since then. So really, this like second peak that we got should be regarded very similar to how 2021 was, where if we look at 2021, sure, price-wise versus the US dollar, this is a better time to sell than here. But realistically, this is the best time to sell. And then go do whatever the hell you want. Buy a little bit more here if you want, or just wait. Like basically just wait until the market presents opportunities. I do think in most instances, and we talked about this in the my credit balance transfer like strategy video, as well as just like for anyone who has like decent and consistent income, you want to prioritize your DCA strategy when we are below the weekly or the monthly SMA. Not financial advice. I use the 20-week SMA. I know plenty of people talk about the 50-week, the 200-week, the 100-week. It doesn't fucking matter. Pick one. Pay attention to how it actually interacts with the price of the asset that you are buying. I don't care if it's Bitcoin. This is a Bitcoin channel, so I'm going to talk about Bitcoin on here. But in general, that's how it works specifically with Bitcoin. Any of these times where it was below the weekly or monthly SMA, you're not going to be upset. Even when we're breaking down years later, you're not going to be upset if your cost basis is 33K. You're not going to be upset. It's never going to go back there ever again. It's never going to happen. I think the lowest I can believe is maybe 39. And even then, I don't think so. I guess I'll jump over to the news real quick. So the news that fucked up the charts this week was Trump's Fed chair announcement. He announced Kevin Warsh. I don't know who the fuck Kevin Warsh is, but apparently he's a little bit more hawkish than people expected. They were expecting him to like appoint someone who's just going to like cut rates right away. I'm already seeing some news where the initial thoughts that he was going to raise inflation versus lower it is like inaccurate. It's like too early to confirm. What I do know is apparently he's like well connected to the other billionaire families, and he's gonna play ball. He's gonna do whatever the fuck they want him to, because this is how the government works. Jesus Christ, not a government channel. This is a Bitcoin channel. So all that matters is this dude is bullish Bitcoin. This guy likes Bitcoin. He does not like over printing money, which doesn't fucking matter because once they actually have the stablecoin bills live, the banks and the people are going to print the money. The fucking government isn't going to have to worry about it. They're just going to have to print anytime that they run out of supply for the treasuries, which they will, because they've changed the mechanism of how they're going to underpin the value of the dollar from us needing. I go over this in the video from Friday, the Japanese yen carry trade. Previously, Japan was the largest customer of U.S. debt. And they've been consistently selling off that debt since 2020, as well as the pressure of China, Brazil, Russia, and other countries that are trying to settle more of their trade not in US dollars and in their local currencies. This is what's caused an upswell in gold and other assets. They want trust in something other than fiat currencies right now. We're seeing like a major breakdown across many fiat currencies, not just the dollar. And that's putting pressure towards people are looking for alternatives and alternatives like Bitcoin. But this is very important. So just to put a pin in that guy is bullish on Bitcoin. So even if there's a temporary drop in the market, it's a temporary drop in the market. Don't fucking worry about it. So this is 8 market cap. I love 8 market cap. It's a great website. So it just shows you the market cap of assets, primarily stocks and some metals and Bitcoin as well. But I'm not going to scroll down low enough to see Ethereum or any of the other altcoins because I have to scroll for a really long time. So all that's important right now is Bitcoin has lost 2 more points. So it's now lower than Broadcom and Tesla. They both had, Tesla didn't have a good week, but a better week than Bitcoin did. And Broadcom is still chugging away. What's really important here, and I talk about this in the book that I will eventually release. I don't know what the hell is wrong with me. I really think the narratives, same way that I just explained how the narrative right now is we're squeezed between the 100K psychological level and the 73.8K psychological level of the 2024 peak. So price is kind of like crammed in between those. We have to be able to navigate through those and pick which side we want to go on either end. That's how I think of market cap. Market cap, specifically the narrative that matters, is these companies do not want Bitcoin to be worth more than those companies, because then why the fuck would I put money into Nvidia, Apple, etc. if Bitcoin is larger and is growing more consistently? Why? They don't want that. So I think this is going to be one of the primary narratives over the course of really between now. I would assume that 2029 is the earliest where we're going to see Bitcoin in maybe the top 3 or 4 again. I do think Nvidia is going to continue to outpace it, and it's quite possible that that's the case for most of these companies. I don't think all of them. I do think, I mean, just based on this, I do think we, the royal we of Bitcoin, I do think Bitcoin will surpass at least Amazon, but Microsoft, Apple, Google, and Nvidia, I think, are going to be the ones that are really, that narrative will be super important going into the 2030s is, can Bitcoin beat Nvidia, Google, Apple, Microsoft in terms of market cap? That's going to be something that will dictate like institutional demand for IBIT versus, ETFs that are controlling these other assets or just buying these other assets outright. So that's going to initially put pressure on Bitcoin, I think, until we see like some major flip that starts to put it closer. And then when it actually shoots past these companies, it'll be a dead narrative. It won't matter anymore. But I don't think that's going to be the case until probably the 2030s. Let's get back into Bitcoin. So most importantly, I don't think that there's anything that dramatic about this price move. I know it feels that way. I know people are like, I'm seeing a lot of people call that we're about to go to 50K right now, which is, you're delusional. That's not how it works. I don't think that we're going to see a breakdown that significantly at the moment. I do think that'll take more time. It is still my base case that we're not going to see the absolute bottom until Q4, probably sometime between October and December. I don't think that this move is that strange. I got to be honest. Maybe it's precipitated by the initial news and the sell off. I mean, gold and silver had like major sell offs this week. Finally, SPY had its sell off last week, but Bitcoin is still super reactive to when these other assets are moving. And you got to remember, like, if somebody has a bulk of their money in some other asset and it starts moving negatively, they're in some cases they're going to need to pull liquidity from elsewhere to protect against that trade that they had a loss. So something like Bitcoin, some of these other assets are not tradable 24/7. Bitcoin is tradable 24/7. So it's going to react both positively and negatively anytime something else happens dramatically in the markets. Bitcoin is going to be one of the first things to sell off because you can sell it off. There's always going to be a buyer for it. This is both a good and a bad thing. I guess it really depends on your if you are trading it specifically or if you're investing in it. If you're investing in it, this is great news for you because there's always going to be a better price for you to buy at certain parts of the cycle. And all you need to do is devise a very simple strategy to continue to allocate to it. So like I said earlier in the video, I think the best strategy for most people is only buy Bitcoin when it is below the weekly or the monthly SMA. That's it. And you can be impatient and you can buy it right when, which again, just a review for anyone who's new to the channel. I'm getting more people that are new to the channel. This is 2022. This is our baseline assumption of what's going to happen here. Other than this at the moment, obviously it's February 1st, so we're just getting started. This at the moment is obviously an early indication that we could break down lower, but we could just as easily pump right to the top. And as you can see, these wicks here, the wicks are pretty big. Like there's a decent amount that it jumps. It's a 12% candle total, 5%, but the total amount that it can swing is fairly decent. I would assume we're going to make another test for, I don't know if I believe 98, but for 96 I can believe, and that's 25% move from here. And again, that's our baseline assumption. And that's what it did here. It dropped initially in January, and it started off February at 38 and then rose as high as 45 before closing at 43. So it's kind of my baseline assumption for February now is we've probably seen the bottom. We've probably seen it. It does kind of depend on where we close today. I'll go over that in a moment. But we've probably seen the local bottom and are now going to see February rise. I would assume we're going to fail 96K again, though. It is possible. So this guy in particular, if we think about it, and yeah, so this one actually, it does give us a similar. I talked about this one before. This is almost exactly half of. It's actually closer to half of 98K than 96K. But we should think about this pivot point as like a twin flame or a cousin to the 96K pivot, in my opinion. And I'm expecting the price to behave the same way. So it's possible in this instance that this is what we see for February. The same thing. We've broken below. We start below and we are able to rise and close above. That's very important for whether this is going to hold true or not. It may not hold true if we're not able to close the candle above the monthly SMA. That's what gave it permission to rise then in March. And same thing here. March opened at 43, went as high as 48, as low as 37, and closed at 45. So March, I would imagine, was very, very volatile for that. We can take a look at that in a moment. But then by April, a full breakdown and full sell into it. And 2018 is largely the same. So 2018 over here, it happened later. It happened a lot later. So still very similar in terms of a sell-off in January that either continues into February but ends up initially rising. So yeah, open of 10, high of 11. Oh, damn. So actually it opened here and that pretty much just gave it up that whole way. But as you can see, we don't interact with the SMA until all the way over here. And that's not the case now. That's just not the case. We already touched it. We're already below it. So it's happening quicker in the cycle than it did previously, but very similar to 2022. So that's still my base case at the moment. I'm getting less and less confident of a push to 106.8K. I don't think it's going to happen anymore. It would have been nice, but I don't think it's going to happen. I think that is probably behind us at the moment. It's more and more likely that this 96K pivot is the one that we actually need to pay attention to, but it's pretty much the same on either time frame. Obviously, like I said, the weekly we are breaking below on the SMA, and I would imagine we don't interact with 96K again until that SMA has been pulled down below it, which is just going to put more pressure. If we think about it as like if we break through 96K here while the SMA is still above, then we only got to break one floor in order to resume bullish prices. And then it's got to have a reaction to the weekly SMA, but it'll have a stronger reaction psychologically if it just blew past a Fibonacci pivot on the way to the SMA. However, to the inverse, if the SMA breaks down below the key Fibonacci pivot that we're not even at, we're at a lower Fibonacci pivot at the moment, then by the time that we actually interact with that Fibonacci pivot, we'll also have to break through the SMA. And if the SMA is, I think it's hard to say which is a more important indicator. Probably the SMA, I would say, because it interacts with it less frequently, whereas Fibonacci pivots change all the time, especially depending on the time frame that you're looking at them from. But essentially, as this continues to get pulled down, when we do interact with it, it'll initially be a bullish signal. But if we then close below that Fibonacci pivot still, it's going to be interpreted as a bearish signal. It's going to be invalidated. There's a slight bullish tilt if it were to do the inverse, where it would get above 96K, which I had to break it to you. It's not going to happen by the time that this candle closes. This candle is going to close, whatever, in like a couple hours, like 5-6 hours, something like that. This will close, and it's closing closer to the 76.2K pivot than it is the 96K pivot, which means, I hate to break it to you, but the pressure is either going to be consolidation or further downside. If we look at the monthly again, it's the same thing. I believe, February has already started. So when we think about it in the monthly time frame, technically the major price move has already happened. The weekly is going to need to print today, but technically we're starting off with the assumption that this is going to close above this fib pivot, which means there'll probably be an initial break back towards it, but 76.2 is higher than 75.5, which is where we actually went. So it'll kind of be viewed as support in that instance. Support forming again above the psychological level of 73.8K, the previous high, which is not that much higher than the other previous all-time high in 2021, the 70K. 70K and 73, I would say, are kind of like interchangeable. 73 became more important, obviously, after that one took precedence from the older one, but that range still of 70 to 73, 74, super important. We're going to need to see how price reacts to that, and it is my assumption that we're going to bounce it initially, make one more test for 96, and then continue bleeding. Because on the monthly, we're still rising at the moment for the SMA. However, what I would imagine is going to happen is it's going to stop rising and it's going to start rounding. It started to round right around here by June-ish. It had broken down already by April. And again, that's my baseline assumption. That is my baseline assumption. I don't think we're about to see a major drop down to 50 now. I do think it's more likely that we're going to want to see if we can hold on to that monthly SMA. I mean, that's not good for January. It's certainly not good. But I think while markets are still a little bit uncertain, this is the pattern that we're looking for. It's possible that we've already broken it and that we're actually looking at this guy, and February is just going to sit on that pivot until it needs to push down lower. But I don't think so. I think it's more likely that we're going to see a little bit more chop here, though this January sell-off was pretty violent, mostly because, again, the guy that the Kevin Warsh or whatever the fuck his name is, he's not bearish on Bitcoin. So even if there's like initially going to be a slowdown of rate cuts or whatever, I don't think that like it affects the markets. I don't think it affects Bitcoin as much as the other markets. The other markets have like tens of trillions of dollars. The crypto market cap, we're still talking about, I believe it's below 3 trillion right now. Bitcoin's at about 1.5 trillion. So alts should be at like maybe 1 trillion, maybe slightly below 1 trillion. So we're talking about a relatively small, again, gold is at whatever, like 35 trillion, 40 trillion, like considerably more. So an asset class like that is going to be hit way harder when there's like a major interest rate change, whereas Bitcoin is still pretty small. So it might feel like a big drop. And I know that psychologically people are nervous right now. They're really worried about, is it going to go lower? Is it going to go lower? And the answer is yes, but not all at once. Like I don't think that we're magically going to teleport from here down to 50. I think we're going to spend a lot of time at that 70 to 73 level, really everywhere in here. So this is 60.4. This is the bottom of those candles, which is also super relevant for here. At 61.4. This first one is 58.8. So really anywhere between like 59K and 73K, we're going to spend time there. It's not going to magically shoot right past that to way lower. It's going to need confirmation of, are we done with these prices or are we not done with these prices? So let's see what it did in the past. In 2017, those levels were 13.8 is the actual close on the monthly candle. Now I know it went higher, both in December and January, though obviously January was descending. Although this says close 13.8. So yeah, open. So yeah, it did have one higher spike in January before dropping, but that's the past. Doesn't matter. We saw it continue to break down until we got to the SMA, major failure, and then the key level. So obviously this one, previous peak to this, I believe was like 1200. I'm not going to go back to 2014 cycle. It doesn't matter. It's not relevant to now. But you can see we're still well above it, still at almost double the previous all-time high. More than double the previous all-time high is like the floor of 2018, 2019. And even the COVID drop, same thing, is still like almost triple the like previous all-time high. Now it's not as pronounced in this instance. So again, this is 2017, 2018. These are the closing candles around 13.8. Where do we go as our low? In 2022, we go to 15.4, 15.5, right around there. So again, that's psychologically above that barrier of those closes. It's not above the highs, it's above the candle closes. So those are the ones that are going to be more accurate for us, is where do the weekly and monthly candles close. That's going to tell us where the bulk of the momentum is going to like form a floor, a support or a resistance. So if we think about it that way, we can think about the highs that function more as resistance, and you can see that reflected on the chart here. So that's where the high is, and where do we see a relative floor? Right there. Right there. We spent a long time at those prices. We chop a little bit below it, but we stay right around there, and then we chop below it once, and then we come back. So if we're to assume the same thing now, then that means right here, this is 61.8, and this is 58.6. We can assume that price is going to come down very close to those and stay there for a while before it does anything lower than that. And in this particular instance, it shouldn't go lower than that. I don't know that I believe that personally. I am of the opinion that it will go lower than 59K. But that means that we have to accept that it's getting more volatile to the downside well, not more volatile to the downside, but it's getting, I guess, like less elastic over time. Like before, it would like swing really high and then swing really low, but not quite. Again, more than double or triple from the previous high in 2013, 2014 being about 1200 to the local bottom in after the next peak. So what we can assume is it will definitely be way higher than 20K. For anyone who's telling you 20K or 28K, I don't think that those people are being realistic. I don't think we have a useful heuristic for, I mean, technically, it's about a 5x from the local bottom in 2018, 2019 to the local bottom in 2022. I don't know that we could assume the same thing because a 5x of 15K is like whatever the fuck the math is for that 75K, which obviously again we're gonna break below 75K. We just almost did. So even if we were to take that as more of an assumption that say it's a 3x or a 3.5x, that would still be 45K, 50K roughly that we're looking at as a major bottom, which I can believe. Like I don't see any reason why it's not possible, but I do think that us hitting that level so quickly, it will kind of form as a floor because you got to remember this is the IBIT holders is all these people in 2024. That's when they put like the initial bulk of their money in. So price is probably going to stay. This is 49.2. I would be very surprised if price goes below that for very long. I can see it kind of consolidating. I think again it's more likely that we consolidate closer to 59 to 73. Like that's where I think we actually spend a bulk of the year. So if we're to extrapolate, let's say it does what it did in 2022. So that means we fully give up the SMA by April, and then we start breaking down until we find a floor initially in June, and I can see that. So that would mean we start the real failure in March. We continue to break down into April, probably break down past that fib pivot by April, and are heading there and get there by June by that assumption. We would then stay there and probably chop through that little time period, very similar how it stayed close to that pivot point. Interesting. That's a double of that one. I think a drop to 44 would be more violent, and it would be temporary. I don't think that would be a sustained level that we stay at for a long time. I think it's more likely the levels that we stay at for a long time are these guys, 59.6 to about 71.6. I feel like we're going to spend a period of months at that, the same way where we've been flirting with 96K since November. It's been very important, and I think it will stay important unless, again, we see a sustained breakdown here, which is not impossible because, again, we're below the monthly SMA. We're in the part of the bear market where we do start to see more significant drops. The peak happened earlier than it has previously, so theoretically we're already closer to the drop. The only thing I will say against that is we've already had November was violent. Like November was a really violent candle. And while it's not impossible for us to see another really violent one, I don't think that we're going to see a sustained drop through both of these pivots. I would imagine we would see strength above 64K if we actually did see just like a continued breakdown into February. But I don't think that I don't think gold is done running personally. I know that it needed a major sell-off and it experienced it, but my understanding of that, and I talk about this in the paid newsletter videos as well, my understanding of that is that gold will continue to go up until the relative bottoms of the housing and stock market, and neither of those are done ripping yet. So until those are done ripping, gold should not be done ripping. And Bitcoin is really separate from those because, again, it's the most liquid one. It's the one that you can sell 24 hours a day. It's the one that costs you nothing to hold it. It's going to be both negatively and positively impacted. I don't know how you can be fucking bearish on Bitcoin when it's $1.5 trillion worth of market cap and only, in 2008 it didn't exist. And now it's been created specifically for this next recession scenario, and it is designed specifically to help people store some of their value during that time. Now, if you got into Bitcoin in 2025 at the end and your cost basis is above 100K, I don't know what to tell you, dude. You were late to the party. The good news is you're now here and present. And for anyone who does not tune out now, Bitcoin is best when it's boring. Period. Bitcoin is best when it's boring. Anyone who continues to DCA during this time period will be very happy. Now, me personally, I'm going to wait to start DCAing probably until we get to 64K or lower. And again, me personally, I'm actually placing most of my energy towards reducing debt so that I can lever harder at the local bottoms with the balance transfer video. Again, you can go check that out. I literally sat on my car for 6 hours and rewrote that book the other day. It's way better now. But that's what I'm going to be focused on, is maximizing the amount that I can borrow at that time at 0% APR, so I can do a max lump sum buy. And I'm comfortable doing that closer to 50, but I will probably start like a minor DCA really once we're below 70. But, over here, as you can see, this is March and April, or April and May rather, and it's at 32, 33, but it drops to 15.5, so it literally drops another 50% essentially from that point. So that's kind of what I'm anticipating here. Is I don't know that it's going to drop 50% from here, because that would put us at like a $38,000 Bitcoin. Is that math? I don't think that's 35, 38. Hell yeah, math. I don't think we're about to see a $38,000 Bitcoin. I have talked about 39, so it is very possible that is like the absolute floor, but I really wouldn't expect that until the end of the year. It's also my baseline assumption that stocks are going to peak probably between July and October, and I expect that they will have a violent sell-off. Again, Bitcoin already had its violent sell-off. That was in November. So anything from now is not going to be as violent as that. I genuinely think it's going to be a little bit more sustained, a little bit more boring, because it's not 2014. It is 2026. Governments are amassing it and creating strategies around it. Corporations are implementing it in their long-term vision of their companies. I hate to break it to you, but a company like Fidelity and JP Morgan Chase does not think in months. They think in decades. So if they're adding this asset as something that you're going to be able to get secured loans against, that you're going to be able to put as collateral on your houses, they're doing that because they are invested in the future of this asset class, and they're going to use it to their own benefit. I'm not somebody who thinks that Bitcoin is going to save the world. Bitcoin is just going to make the world more of the worlds. They'll just be good, and bad people will be able to store value better over time, but only the ones who are patient and pay attention. If you don't pay attention and you only buy when we're way above the weekly and monthly SMA, which again, not everybody follows this channel. Not everybody knows how to, set an indicator, a basic indicator on TradingView. Some people are just looking at the chart on Coinbase or something else. And you're a fool if you're doing that. Learn TradingView. It's free, literally. So that's kind of like the baseline assumption, is that we'll continue a consolidation period after we've had the major drops. I think the major drop is going to come either if we do see a sustained break lower than that 75.5K that we just saw in February. It's very possible that we continue earlier, and then we're not going to see a reclaim of the monthly SMA. I don't think that there's anything. It's possible that if they if they pass the stablecoin bills early, it's possible that that could be enough of a news spike, the same way that the election was like a news spike that did like really allow volume to return in a way because it removed all of the uncertainty. But I think that would be temporary still, because it's my understanding, and I may be incorrect about this, but it's my understanding that the full effect of the Stablecoins Act does not take place until January of next year. So, and just my understanding of how governments print money. Governments don't print money when everything is going well. Governments print money when it's not going well. So we haven't seen a major breakdown in stocks and real estate that would require them to start printing the money yet. So what they're doing now is they're setting up the rails so that they can print the money. But until those rails are completely defined, there is no liquidity. The liquidity doesn't exist. So that's going to be boring for Bitcoin. That's going to be not bullish for Bitcoin. And that is to your benefit. It's just to your benefit. Whenever the prices are below the weekly or monthly SMA, it's a great time historically to buy. You would not be upset if your average cost basis was under $6,000 per Bitcoin. Even if you had to be patient and you were only at a double or a 2.5x when it went down in 2022. Shut up. Get a job. It's like, find other ways to make money. This is not to make money unless you're trading it. This is to transport the value that you have at key moments into a larger amount of value in the future. And it's really not rocket science. Like I like the Bollinger Bands and this specific SMA because it confirms what I already can do just by writing it down. So it's not rocket science. If the peak was 70K, it's not rocket science to assume that 35K is going to be important. Why? Because it's 50% of 70K. So by that same logic, if 126 is the peak that we're operating from, what is a likely point that we're going to hit on the chart just by the psychological, like the simple math of it, the napkin math, as I like to call it, as opposed to the chart? Because if you really think about it, I'm a multi-billionaire. I'm worth $10 billion. I'm talking to another guy at a bar who's worth $15 billion. And we're in competing firms or whatever. We're going to broker some deal with each other. And it's going to be, part of it is going to be related to IBIT and other assets that are correlated to Bitcoin. Am I going to write an email that has all of that goes out to my whole office? Or is it more likely that when I'm sitting at a bar with this person that I'm just going to verbally say it, and maybe I write it on a napkin if I don't want to be, too verbose about it? It's simple is the point. It's something that you can have a casual conversation with and somebody can understand. Oh yeah, 35 is half of 70. I could see the price going there. I could believe that. And enough people believe it, and then it happens. So what is half of 126? 63K. What evidence do we have for 63K? 71. This is 59. This is 61. So that's pretty much right around the top of those candles, slightly above the top of those candles. So again, I'm not personally sold that 50% is going to be the end of the retracement from the top. I am of the opinion it's going to be closer to, I believe the last one was 78%. Work, do what I tell you to. No, I didn't mean to do that. So what would 70 be? 70 would be down here, about 38, 39. That's still my base case. I don't know that we see it. I'm not going to wait. I'm not going to wait that long. I got to be honest. I'm going to rip the cord and borrow a bunch of fucking money around the 50K level. Not financial advice. I don't need to wait to see 39. The same way that when I originally started to get better at analysis, I had called out 10 to 12K was where I thought we were going to go. I was pretty sure that we were going to go down there. And we didn't. And it's not like I fucking didn't buy any when we went to 15.4. I bought as much as I could afford at the time, So I have a lot of friends who bought a full Bitcoin at that time, which good for you, bro. It's fucking sick. I fucking wish. But that's kind of what we're looking for. Is we're going to see a breakdown, and it's going to consolidate around key levels. Where did it consolidate this time? Right around 20K. Why was 20K important? Because that was the previous peak. So we're going to assume the same thing, that it's going to consolidate around these two peaks. Now, previously, before 2024, that would have just been 70K. It would have been 64 to 70K. It would have been where we would have gone down to consolidate. Whereas now, it's going to be slightly higher at 74, and it's just going to take longer. I'm trying to think of like a proper analogy. Bobbing for apples, I guess, is the easier one. When you're first doing it and there's a bunch of apples, it's easy to get one because you bump into the next one. But as there's less and less apples, it's hard because it keeps going away from you, And it's kind of the same thing here, where initially it'll be easy for us to stay at those levels because there's so many other closing candles that are right at those levels. But once we keep failing it, eventually we're going to break down. We're going to lose those levels, and we're going to need to go lower. It's going to be harder and harder to get to that last apple before we can get out of it. I don't know if that makes sense, but whatever. That's kind of what we're waiting for to see here, is what is the actual lows that we're going to need to sweep before we're comfortable of, all right, cool, game on. And I do think that will kind of happen in alignment with, like I said, if January is when stablecoin acts go into full effect. If I'm JP Morgan Chase and I turn the stablecoin printer on and now I can start offering those to my customers, what am I going to do? I'm going to give them a promotion that gives them like extra points or whatever the fuck if they spend a certain amount with the stablecoins, which that is based on the law that they're trying to enact. That's what they want. They don't want to give yield on stablecoins. They want to give you like points and bonuses for spending more with the stablecoins. Why are they doing that? Because it's going to act as a money printer, essentially. Every time you borrow, you are printing money, period. Every time a bank gives you a personal loan or something like that, you are effectively inflating the currency supply for everyone else. Now, you're poor. If you're getting a $6,000 loan, you're not fucking over the economy, But the combined effort of all human beings doing that, and that's what is now going to happen. Previously, it was just U.S. citizens and customers of U.S. debt. But now, it doesn't have to be customers of U.S. debt anymore. It has to be anyone who uses a stablecoin that is backed by the U.S. dollar. Anyone who is using a stablecoin that is backed by the U.S. dollar, the issuer of that stablecoin now has to be the customer of that debt. But they're not paying for it. The customer is paying for it. The person who is actually transacting the stablecoins is the one who's paying for it. It's kind of brilliant if it wasn't so dystopian, honestly. But that's what the banks want. The banks want to incentivize the volume of transactions because they also have to replace. The stablecoins are going to replace wire transfers. It'll be considerably less fees and speed for a wire transfer. A wire transfer typically takes between 3 and 7 days. It's now going to take between 10 minutes and an hour or whatever, depending on the exact rails the stablecoin is built on. But essentially, it's going to dramatically speed up the rate of transactions, which is going to be it's going to be an explosive effect for the amount of money that is printed, and that money is going to need to go somewhere. And it's going to go to Bitcoin. It's just not going to go yet. I really don't think that we see, again, if I'm JP Morgan Chase and I want hundreds of billions of dollars to flow into my stablecoin, do I want my stablecoin to be live when Bitcoin is worth $126,000? Or do I want my stablecoin to be live and ready when it's at its bottom so that I can indirectly signal to my customers, I'm going to give you 100,000 points if you transact this amount in stablecoins or whatever. And if those points can be redeemed in Bitcoin, or if they act as a statement credit, essentially, that you could then go buy Bitcoin at, that's going to be pretty appealing to people to as we're at bottoms for asset prices, which I do expect similar. Like I said, I think for stocks, it's going to be a more violent breakdown. Whereas Bitcoin, I think we've already seen the violent breakdown. It's going to be more boring and choppy from here. When there's blood in the water, it's going to be a really appealing time to have a bunch of extra cash. And I think that is going to happen January, not any sooner than that. I could be wrong, but I don't think so. I think that stocks are going to continue for most of the year. Real estate is going to continue for most of the year. which is terrifying. That chart is terrifying. It's such I don't know how people invest in real estate. It's to me that's the scariest chart that exists. But yeah, so for Bitcoin specifically, that's what we're looking at. I know I've kind of rambled. I'll go over more specific targets in tomorrow's video and in the newsletter. But the ones that are still like the broad consensus at the moment is 96K is super important. 76.2K, super important. And especially if we're able to maintain above 76.2K for all of February, that's what we really want to see. But I would assume any like major breakdown that we have is going to happen now instead of later in the month. Especially if we consolidate for the whole month, or if we're able to see a bounce higher. I think it's less likely that we break down to 76 and more likely that we don't get to 96 but get closer to 96. And there are some other important levels here in between, like volume profile levels. This guy is very important. 87.5 is currently the point of control. So that's where the most people have bought and sold. And that's what we're going to need to do is we're going to fill out some of these levels in order to actually sustain permission to go higher. But I didn't mean to do that. In general, we have a lot of thinness at levels that are key for if we're going to see upside continuation. So I just don't believe we're going to see that upside continuation, which I know is not what you want to hear. But if you're listening this late in the video, it's because you understand the value of accurate analysis instead of hopium analysis. I think that's it for this video. It's pretty much all I wanted to say. I do think we have probably seen the low for now, and that it is likely that we will see some type of recovery. This weekly candle, as long as we close above that pivot point, we should be fine. And it is looking, not great on the lower time frames. There's no indication that we're going to randomly bounce higher. Let's see if there's any important. Well, we did touch. What did I just do? There was a level there, and then it disappeared. 75.6. I don't think I had a level there, but so there's nothing really holding us up. Like I said, the important one is this guy, and then obviously 73.8. So it's more of a psychological barrier that is actually keeping the price up at the moment. It's like there's no like price that's going to like magically save us here, other than if we stay well above 73.8. That'll be like a slight psychological hint towards price being strong, but it's not. It's like it looks bad at the moment on every time frame. It looks really bad on the daily. Look at that. We had an attempt on Wednesday to get back above it, and that just is a sustained failure moving forward. It just doesn't look like that's going to curve up anytime soon. So it's just as likely that we do break below that 76K pivot. This, I suppose, on the daily is actually a good sign, because we wicked down to that 75.5K pivot, which, as you can see, didn't even exist until now it exists. It didn't exist when we went to that. 77.8 was the one. There it is. That's that level that I was talking about before. That's where we actually broke through. But as you can see, we closed above it, which is good. And now we're flirting with this, which means we'll probably see another retest of 75.5 before we see a bounce. But I don't personally believe that we're about to teleport to 50 now. Maybe I'll have to eat those words very shortly, but I don't think so. I think we probably are going to see some strength there because people will realize, oh, wait a minute, this guy actually likes Bitcoin. I don't think it's that bad, and then markets will recover after this initial sell-off. That'll give us permission to go back towards about 84. I don't think we see 96 again, though. I got to be honest. It's not looking to me like we're going to break that fib pivot. And if we do, it's going to be temporary, and then it's just going to form as a failure of 98 and 100 again. So overall, still bearish. I would be cautious about entering shorts after such a downside move. Probably better to pay attention to a consolidation and a floor and try and catch the upside bounce for anyone who is trading. Anyone who is investing, you can either start dollar cost averaging if you are rich and you have a bunch of cash, or if you are kind of cash strapped, just be a little more patient. But again, if you zoom out, anytime that you bought below the weekly or monthly SMA, you would still be happy. So you should not be sad right now when we are below the weekly and monthly SMA. You should just be focused on increasing your income and focused on increasing your exposure to more Bitcoin. Hopefully this video has helped you strategize a bit for the coming weeks. That's what I want to do with this channel, just help you amass more Bitcoin, partially by losing less of it. So if you're somebody who really needs your stack to pay bills and stuff like that, you got to consider that. That is something that you're going to have to factor in, since the price is going to continue to go down if you are relying on your Bitcoin as a source of income. I just think about it as retirement personally, so that's how I'm focused about it. But yeah, that's what we got to look forward to in the immediate future, is we want to see, can we get strength here? We are below the April lows of last year, or right around it, low 74.04. So technically we're above the absolute low. The close is 83.7, so way higher. So we are much below that. But that's what we want to look for now, is psychologically some strength around that level, probably one more sustained upside move, and then the complete breakdown closer into March. But it's quite possible that breakdown has already started. So don't get too excited. Don't freak out. Just stick to a strategy and you'll be fine. All right. I'll see you tomorrow.